this morning. From stocks to bonds to money-saving techniques, there are so many ways you can invest. But what is the best way? Joining us this morning, Bert from Certified Financial Group, also known as the Oracle of Orlando. Happy St. Patrick's Day.
Same to you.
Top of the morning. So let's talk a little bit first about why we invest. You know, there's this view out there by some that investing is for the rich and maybe to get rich and get richer, but it really should be a part of everyone's strategy if they can possibly do it, right?
Well, first of all, we have to, as you say, we have to distinguish between savings and investing. Savings is for immediate needs, money that you're going to need in the near term, the next 3 to 5 years. Investing is really for the rest of your life, because there's going to come some point in time, Tom, when the paychecks stop. Either by your own wish or by you got laid off, whatever, the paychecks are going to stop. And then you have to ask yourself, what am I going to live on? You need a pile of money to draw from to supplement Social Security, and if you're fortunate enough to have a pension. So that's why you invest, because you have to get that great rate of return.
All right, let's talk some strategies. I know we have 5 here that we want to go through. First, be wary of individual stocks and bonds. What do you mean by that?
Well, trying to pick individual stocks is a guess at best for the individual investor. It's very difficult to follow all the ins and outs of any particular company. And I can give you example after example. How does the name WorldCom, Enron ring a bell to you? Eastern Airlines, Kodak. You know, you think you know those companies inside and out, and you don't. The best way to invest in stocks and bonds, in my estimation, is to use a mutual fund. I've been in the investment business for over 30 years, and I own only one stock, and happens to be in a local bank. I don't pick individual stocks. Our job, my responsibility, is to find the best money managers, the best mutual funds, because that gives you diversification and professional management, which most investors don't have the time for.
And for anybody who may not know, a mutual fund has a broad range of stocks and bonds.
Exactly.
All different kinds of companies and things like that.
Minimum of 20 and sometimes over 500 different companies in one fund alone.
Diversity across asset classes.
Right.
What does that mean?
That means you don't want to bet the ranch on one particular kind of mutual fund, or whether it's in large companies, foreign stocks, or real estate. You want diversification. That's the key.
What's dollar cost averaging?
Dollar cost averaging is what you're doing every week when you take money out of your paycheck and put it in your 401k. You're moving into the market, regardless of what the market is doing. You're not letting emotions take charge. You're making those systematic, disciplined approaches, and that's the best way to accumulate money.
If you do a budget, which hopefully everybody is, you worry about expenses, and you need to do it with investing as well, right?
You got to pay yourself first, because if you don't pay yourself, there's going to be nothing at the end.
And finally, rebalance and review.
Well, this is the toughest thing, because emotions once again take charge. You see part of your portfolio doing really well, and you just let it run, let it ride, and then the bottom falls out. And we have to do the important thing, and that's to sell high and buy low. It takes discipline to do it, but that's the key.
All right, Bert, the Oracle of Orlando. Thanks for being here.
All right, Tom.
All right, coming